Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Park National Corporation Annual Report. Park National Corporation provides a wide range of businesses and services to its customers. At the core of its offerings are commercial banking and trust services, catering to small and medium population areas across the United States. The company's deposit services include demand, savings, and time accounts, as well as safe deposit operations and electronic funds transfers. Its online solutions provide customers with internet and mobile banking capabilities, including bill pay service and credit cards. In terms of lending, Park National Corporation offers a variety of commercial loans, such as financing for industrial and commercial properties, equipment, inventory, and accounts receivable. It also provides acquisition financing, commercial leasing, and consumer finance services. The company's loan portfolio extends to commercial real estate, including mortgage loans to developers and owners of commercial property. Additionally, it originates financing leases for the purchase of commercial vehicles, operating/manufacturing equipment, and municipal vehicles/equipment. Park National Corporation also offers consumer loans, such as automobile, recreational vehicle, and watercraft loans, as well as home equity lines of credit and residential real estate and construction loans. Furthermore, its services include installment loans and commercial loans, aircraft financing, and Park Direct, a personal banking application. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to increase. The stock price of Park National Corp has increased slightly over the past year due to several factors. One possible reason is the company's strong financial performance. If Park National Corp has reported higher earnings and revenue growth compared to previous years, investors may be optimistic about its future prospects, leading to an increase in stock price. Another factor that could contribute to the rise in stock price is the overall economic environment. A growing economy with low unemployment rates and rising consumer spending can lead to increased demand for financial services, benefiting companies like Park National Corp. Additionally, a stable interest rate environment can also support the company's stock price by reducing borrowing costs and increasing profitability. Furthermore, changes in industry trends or regulatory policies can also impact the stock price of Park National Corp. If there are new developments in the banking sector that favor community banks like Park National Corp., it could lead to an increase in its stock price. Similarly, if regulatory policies become more favorable for small banks, it could also contribute to the rise in stock price. Lastly, investor sentiment and market trends can also play a significant role in determining the stock price of Park National Corp. If investors are optimistic about the company's prospects, and there is a general trend towards investing in community banks, it could lead to an increase in its stock price. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a financial institution can be identified through an analysis of various income streams. On the positive side, net interest income has been steadily increasing over the past 2 years, with a notable jump in 2025. Other service income and mortgage servicing rights income have also seen significant growth, driven by increases in mortgage loan originations and commercial-related services. In contrast, debit card fee income and bank-owned life insurance income have declined due to decreases in average interchange rates and death benefit income, respectively. Net loan originations, both for portfolio loans and those sold in the secondary market, have also seen a decline over the past 3 years. However, some revenue streams remain stable, including personal trust and agency accounts, employee benefit and retirement-related accounts, service charges on deposit accounts, and ATM fees. These stable income sources provide a consistent foundation for the institution's revenue growth. Overall, the financial institution's revenue growth is driven by a combination of increasing interest income, growing service-based revenues, and stable fee income streams. Net income and profit margins experienced fluctuations between 2023 and 2025. Initially, net income increased from $126,734 in 2023 to $151,420 in 2024, a growth of nearly 20%. However, this trend was short-lived, as it decreased by 16% from 2025 to 2024, resulting in a net loss of $28.7 million. The profit margins also showed an upward trajectory, with return on average assets increasing from 1.27% in 2023 to 1.53% in 2024, and then to 1.78% in 2025. Similarly, the net income margin rose from approximately 10.2% in 2023 to 12.6% in 2024, and further to 13.3% in 2025. The reasons behind these changes can be attributed to significant events that occurred during this period. The decrease in losses related to debt securities sales in 2025 contributed positively to the net income, whereas a substantial loss on the sale of debt securities in 2024 had a negative impact. These variations highlight the volatility of financial performance and the importance of considering specific factors when analyzing changes in net income and profit margins. The company's financial performance indicates a strong ability to generate positive operating cash flow. According to the data, in 2025, the company produced $198.3 million in cash from its operating activities. This significant amount of cash generated from operations suggests that the company is efficiently managing its resources and generating sufficient revenue to cover its expenses. Moreover, the net cash provided by operating activities for 2025 was a positive $115,047, further confirming the company's ability to generate positive operating cash flow. This indicates that the company has a stable financial position and is capable of meeting its short-term obligations. Overall, these figures demonstrate the company's strong financial health and its capacity to generate sufficient cash from its operations. The company's debt level has undergone significant changes over the past 2 years. According to various reports, the total debt decreased by $101.6 million, 32.8%, from 2024 to 2025. Additionally, the debt level dropped from $1,100,861 in 2024 to $802,142 in 2025, and also decreased from $124.1 million in 2024 to $110.3 million in 2025. However, there is conflicting information regarding interest expenses. Initially, it was reported that interest expense increased by 26% from 2023 to 2024. Nevertheless, the most recent data suggests a significant decrease in interest expenses from 2024 to 2025, with a drop of $17,717,000 from $124,946,000 to $107,229,000. This indicates that the company's interest expenses have decreased significantly over the past year. The banking segment has shown a remarkable improvement in revenue over the past 3 years. In 2023, the segment generated $126,734 in revenue, which increased by $24,686 to $151,420 in 2024. This significant jump indicates a strong performance by the banking sector. Building on this momentum, the segment saw an even more substantial increase of $28,653 in 2025, reaching a revenue of $180,073. These numbers demonstrate that the banking segment has been a standout performer, with consistent growth and improvement year over year. Management is optimistic about the company's outlook, citing its ability to execute its business plan successfully. The primary focus of the company remains on owning and overseeing its subsidiaries engaged in banking. To drive growth, Park has acquired First Citizens, which is expected to exceed $10 billion in total consolidated assets by 2026. The company acknowledges intense competition from non-traditional sources such as fintechs and digital assets, but notes that it has been preparing for a smooth transition with new regulatory obligations. Management also highlights the importance of risk management, particularly in regards to cybersecurity threats, which are considered severe and increasing. In terms of financial performance, Park meets the ratio requirements to be deemed well capitalized and achieved net income of $180.1 million in 2025. However, management notes that the company's net interest margin could be negatively impacted by rate changes. Overall, the company is focused on executing its business plan, driving growth through strategic acquisitions, and managing risks to ensure long-term success. Acquisitions and divestitures are significant business transactions that can have a substantial impact on an organization's operations, finances, and overall strategy. In the context of the extracted summaries, several acquisitions and divestitures have been identified. The company has made various acquisitions, including the purchase of First Citizens and its banking subsidiary, First Citizens National Bank, which was completed on February 1, 2026. Additionally, the company acquired Carolina Alliance, further expanding its reach and capabilities. The assumption of loans with deteriorated credit quality is also considered an acquisition, albeit a non-traditional one. On the other hand, the company has also engaged in divestitures, including the disposal of former Vision Bank loan relationships. These transactions demonstrate the company's ability to adapt and evolve through strategic acquisitions and divestitures, ultimately positioning itself for future growth and success. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends. According to the financial records, the company paid out significant amounts in 2023, 2024, and 2025, with the highest payout being $5.53 in 2025. In addition to paying dividends, the company has also been actively buying back its own shares. This practice is evident from the financial statements on page 74, which show that the company repurchased treasury shares in 2023, 2024, and 2025. The amounts spent on share buybacks were substantial, with a total of $167,323,000 being spent in 2025 alone. These actions demonstrate the company's commitment to returning value to its shareholders through both dividend payments and share buybacks. That concludes the financial summary for Park National Corporation. Feel free to comment below, and I will be happy to answer them when possible.